The interesting thing about this market, and this has been true now for several years, is it trades very technically. And what I mean by that is if you go back to 2018 as an example of this, the market kept going up and up and up. And as we kept on ramping up the pressure on China and the trade war kept getting worse. And then all of a sudden you get to, I think it was September 20th, and the market completely comes unglued and it goes down almost 20% by Christmas Eve. And then, people kind of forget about it. And then if you move forward to May of 2019, sort of a similar situation where Huawei got put on the entity list, if you remember, in May of 2019, and the S&P goes down 6%, the semiconductor index goes down 17%. So I think right now, if you look at the recent bounce of over 35%, people have sort of done the same thing like they did in 2018 or 19. They've sort of put their head in the sand because the market's going up. And the great thing is there's a lot of exchange traded funds out there related to China or Hong Kong or Taiwan. There's individual ADRs related to China or Taiwan that you can go ahead and short. And so, if you can short, that's a good way to do it. But quite honestly, if you're a long only investor or you just own stocks, it's a good time to take profits. I mean, the S&P is at record valuations on a market cap to GDP basis, is at 1.6. The long-term average is 0.8. So, it's a good time to take profits and say, look, I've been lucky. The Fed's come in, the US government's come in, the market's bounced a lot. Let me take these profits and see how this shakes out because I've seen this in 2018 and 19.